4 directors of the now defunct gold investment company Genneva have been sentenced to 8 years jail and fined 1 million ringgit each. If you recall, ex-directors Ng Po Wing, Marcus Yee, Chin Wai Leong and Liu Chi Wah were convicted on multiple charges of money laundering and illegal deposit taking involving more than 100 million ringgit. Should they fail to pay the 1 million ringgit fine, they will face an additional year in jail. Judge Motaruddin Maki, who led the Court of Appeal's 3-man panel, said the court decided on the sentence due to the huge amount of money involved and the gravity of the crimes. The case can be traced back to as early as July 21, 2009, when Bank Negara began investigations into Genneva on suspicion of illegal deposit-taking activities. The central bank froze Genneva Malaysia's checks, accounts and other assets worth 99.8 million in cash and seized 126 kilograms in gold bullion based on suspicions that the company had broken several banking and financial laws. AirAsia X's fourth-quarter net profit more than doubled due to higher passenger volume, higher ancillary revenues and better seat loads. Earnings stood at 84.4 million ringgit as compared with 39 million last year. Revenue increased 4.3% to 1.22 billion from 1.17 billion in 2017. AAX says it saw a 12% growth in passenger volume, while average fares dropped by 8% to 519 ringgit. AAX's full-year earnings also more than doubled to 98.9 million ringgit on the back of 4.56 billion in revenue. The long-haul low-cost carrier says barring any unforeseen circumstances, the company expects its prospects to remain positive for the coming year. Malaysia Airports Holdings' fourth-quarter earnings fell 16.4% as costs went up. Net profit came in at 27.9 million ringgit as compared with 33.3 million a year ago. However, its revenue was 15.4% higher at 1.25 billion from 1.1 billion in 2017. Drilling down, airport operations recorded revenue growth of 9.8% to 4.2 billion ringgit, while its non-airport operations revenue grew 14.4% year-on-year to 297.6 million ringgit. It declared a final dividend of 8 cents per share for FY17. Its full-year report card was rosier as earnings more than tripled to 236.5 million ringgit on the back of a revenue of 4.7 billion ringgit. MAHB says that 2018 holds the promise of being another exciting year for the company, adding that the growing travelling local population, the impending elections with an increase in the per capita income will further support air travel growth. Malakoff's fourth-quarter profit more than halved due to lower capacity payments at Segari Energy gas plant and lower contribution from Tanjung Bin due to plant outages. Net profit was 43.7 million ringgit compared with 90.2 million ringgit in 2016. In contrast though, revenue went up 4.7% to 1.8 billion from last year's 1.7 billion. The better top line was because of higher energy payments recorded at Tanjung Bin on the back of higher applicable coal price. Its full-year earnings came in 12.8% higher at 310 million on the back of 7.13 billion in revenue. Malakoff also declared a final single-tier dividend of 3.7 cents, bringing total payout for FY17 to 6.2 cents. Moving forward, Malakoff says it is well positioned to benefit from the projected demand with the successful commissioning of Tanjung Bin Energy Thermal Power Plant and expects performance to remain satisfactory for FY18. The final version of the Trans-Pacific trade deal was released today, signaling it was a step closer to reality and without the United States. According to Reuters, more than 20 provisions have been suspended or changed in the final text, including rules around intellectual property originally included at the insistence of the United States. The fate of the TPP had been up in the air earlier this year when US President Donald Trump withdrew from the agreement. The remaining 11 nations finalized a revised trade pact in January called the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. It is expected to be signed in Chile on March 8. The report states that the success of the deal has been touted by officials in Japan and other member countries as an antidote to counter growing US protectionism.